Hi everybody, welcome back to another CYT-Crypto episode. My name is Stephen Aitchison, and today we'll be going over the markets and we'll be looking at Ethereum, Bitcoin and a couple of news stories as well. First of all, I want to show you something. The reason I'm doing this kind of late, the video late, I'm recording this about 10 o'clock in the morning. Usually record about 9 o'clock and do all the editing from there. But I was seeing a video from somebody in the free group called Coin Pilots, and thumbs up to you. And he sent over a video about what's happening with the kind of feds just now and the kind of repo market and things like that as well. And I started listening to it and I thought, okay, I'll just give it 5 minutes to listen to or something. But it was really, really interesting. I'm going to show you just now. It's from Crypto Blood. And it's somebody that's called into his show as talking about the repo market is exposed by Philly bond trader. And she said the Fed is hiding the real reason for the rate cut. Just now, and she kind of saying exactly the same as me what I was saying about the coronavirus as well. It's all bullshit. It's just a smoke screen just to cover up what's really happening in the kind of debt crisis just now. But it was a really, really interesting call. So listen to the whole call for 40 minutes. So that's why I'm late doing this just now. So I'm going to share the link down below for you as well. I think you should give it a listen. She sounds as if she's on something, to be honest, but what she says in it, you need to have a listen for you to understand it. But listen to this show as soon as you hear this, as soon as you hear my show. I'll put the link down below for it as well. Okay, thank you very much for watching. If you like these videos, subscribe to this channel and hit that subscribe button, hit the notification bell, hit the like down below as well. I don't know why we went off there. But yes, so it's not going well, the recording today. I'm going to leave it in anyway. We'll just get to it. Okay, we'll jump into the markets just now. Okay, market capitalization of $223 billion at the moment. It's going down again. Bitcoin dominance 64.2%. We've got Bitcoin going down 7,841. I thought it would bounce. You're going to see in the Bitcoin chart just now, we're still perfectly on that level just now, or on that lower trend line that I was talking about yesterday. I'll show you that in a second. Who's the winners and losers? We have Blockstack is up 23%, Ren is up 17%, Synthetics Network, Waves, Kyber Network, all in double-digit greens, which is good. And below at the bottom we have Swipe down 12%, Theta, DX Chain, Aion, Loopring, V Systems all down as well. Not by that much. And we've probably got about 50-50 or 60-40 in the red. So 40% green, 60% red at the moment. Okay, on to the Ethereum chart. Ethereum's doing exactly the same as it's been doing the last couple of days. You can see this descending channel on the lower trend line. We're perfectly hitting this lower trend line and bouncing back up. So, what happens in this situation? Usually, we're going to get an increased chance of a downside or a break to the downside here. So, the more it kind of knocks on this door and doesn't bounce back up, obviously kind of tells us the bulls are not there at the minute. So it can't sustain any kind of rise here. It tried to rise before up to $215. It just didn't make it, kind of ran out of steam, came all the way back down again. So this is looking bearish for me. This is looking more bearish than bullish at the moment for Ethereum. Same with Bitcoin as well. But with Ethereum just now, unless we get a strong bounce from round about the $194 level, it looks as if we're going to go down from here. And it could be a significant drop. We could see it going down to below kind of $170 again if it falls below this support line. Now, it hasn't done it so far. But that's 4 times it's knocked on that door. So you can see 1, 2, 3, and 4. Now, if it doesn't bounce from here, and I mean a strong bounce, up past $215, $220, it could come down and break below this lower trend line. It would invalidate this structure and would be into a new kind of structure after that. It's not broken it yet. When I say broken, the body of the candle has to be kind of outside here, this lower trend line, for it to break. Not there, but it's getting very, very close, dangerously close just now for Ethereum. So this is a pattern we're looking at. This is a structure we're looking at. We can see obviously we've gone down below the 21 EMA at the moment. That happened at $242. So it doesn't look like anything's going to change just now. but it is looking more bearish than bullish at the minute, I'm afraid to say. I'm not a perma bull, but I'm more looked towards, I've got a bias towards the kind of bullish side, but in this instance, it's looking kind of bearish. If we don't get a strong bounce from here, we're going to have to look at a different structure, and we could see it going below $170. Bitcoin, exactly the same we can see here. This kind of descending channel knocked on the door 4 times, and it looks as if it's going to break to the downside again. We're at 7,826 just now, so we could be moving down to 7,500 for Bitcoin unless we get a strong bounce here again. It doesn't look like it's going to happen at the minute, and we're going to put on. So if we kind of break this, we've got support round about here, but below that we're talking about 7,500, then we're on down to 7,200, and then all the way down to 6,800 for that. So we need a strong bounce here. We need to get a bounce here, up to that 8,000 level again, then up to 8,300, then on up to 8,600 for this to be invalidated. Now, I'm saying it's more bearish at the moment. It's not happened yet. We've just started the new day, obviously, and we've got this body just inside this kind of structure just now. So it really has to bounce from here. So we're looking for a bounce from here and to stay above, say, 7,900 today. If it doesn't, we could be going down much further than this. 7,500 is the first level, then on down to 7,200. Then down to 6,800, 7,000 being a psychological barrier as well. So just pay close attention to what's happening there, and just kind of be careful, obviously, as well. We're obviously going to get a drop in the alts. Some of the alts are going up just now. So just take a quick look at what's happening. You can see Band jumped up big time. That's in our Hidden Gems portfolio as well. That has jumped up big time. It went up to 9,000, nearly touched that 10,000 level, which is the level I kind of spoke about a few months ago, but it didn't quite get there, 9,700. So that is doing extremely well, and I think it's up over 110% in the Hidden Gems portfolio. So Band doing well, STX, Blockstack is doing well as well, Ren, KNC, Waves, Peril, Troy is doing okay at the moment as well, Kava, PivX as well. So I think we're going to get a drop in the alts if we see a drop with Bitcoin as well. But we're holding on for dear life to that 7,800 level. Kind of holding on. If it drops below that and finishes up at the end of the day, we're going to see a drop in the alts as well, unfortunately. But you're going to get some outliers. So you're going to see some of the alts jumping up as well. Okay, what's happening in the stock markets just now? Stock markets, we've got, this is the FTSE 100. It's above 6,000 at the moment. But we could see a kind of bigger jump from here. We might see a kind of jump from these levels, because I think the Feds are going to keep on cutting rates. And look at that video as well. If you watch that video, that's exactly what this kind of trader says as well. And she kind of talked about the oil going down to about 30 as well. It did hit 30. So definitely have a listen to that video. Very, very interesting. But I can see us going back up from here. We're going to get cuts. The bond markets, they've issued something else. Effectively, the Feds have put $168 billion into the market again, with these kind of bond and repo kind of bonds. It's just kind of ridiculous what they're doing, but it's going to help the stock markets. So we could be going back up from here as well with the stock markets. So we need to wait and see what happens there. Okay, what's happening around the world with the news? So this is about the Cryptocurrency Act of 2020 and the impact it could have on the crypto space. So the crypto space woke up this week to an interesting development. Republican Paul Gosar has introduced the Cryptocurrency Act of 2020 to the US Congress. One fact about the submission was clear. He went solo. Nobody else had kind of done it with him. And the bill classified digital assets into 3 categories: crypto commodities, cryptocurrencies, and crypto securities. And as per the bill, 3 agencies will regulate each category: the US CFTC, the US Treasuries, FinCEN, and the US SEC as well. So the Act is a great start to defining new rules for the crypto space in the US. However, there are issues with the Act. Section 6, 16 to 21, includes operations of tracking transactions by the US Treasury FinCEN The tracing will be based on instructions from the Treasury Secretary. Not good. It kind of goes against the whole ethos of what cryptocurrency is. So the purpose of tracing transactions seems clear. Financial transactions that have criminal origin might use the pseudonymous nature of digital assets to launder their funds. Bullshit. And we all face the same thing when it comes to the US dollar as well. So it's just, that's their excuse for tracing to catch criminals, which is a big, huge downside to this bill if it gets passed. And obviously it's the very first stage just now. But it's a good thing for kind of classifying cryptocurrencies, it's a good thing for kind of getting it out there and having some kind of regulation with it as well. That's kind of a good thing, but I don't see overall. It's a slippery slope, but we need to wait and see what happens. We're going to have to get some kind of regulation in anyway. So as to what degree that's going to be, we just don't know. Trading legend John Bollinger explains whether Bitcoin is a safe haven asset. So when I first read the headline, I thought you can't define a safe haven asset, but it kind of goes on to explain this. So Bollinger believes that there's no surefire way of determining the safe havenness of a certain asset. If enough people that a certain asset say it's a hedge fund against global economic uncertainty, it probably will act as one. So per the many comments to my note on safe haven status, or lack thereof, of Bitcoin, safe havenness is a matter of perception, not fact. If an asset is thought to be a safe haven, it is. The matter is entirely psychological. So totally agree with that. So it's the same with whole cryptocurrency and the whole of the cryptocurrency space, in that if you believe that crypto is going to go up and enough people believe that, then there's more money going to get poured into it and it's going to become a self-fulfilling prophecy as well. So this is kind of what John Bollinger is saying as well about Bitcoin being a safe haven. So if enough people say Bitcoin is a safe haven, put your money into Bitcoin, a lot of people are going to do it. Then when the markets start to go down, stock markets go down, we see Bitcoin going up. That's probably what's going to happen. It's happened with gold, and that is not a safe haven as such. It's only a safe haven because people have made it a safe haven. If enough people come out of gold and say, okay, gold is no longer a safe haven, Bitcoin is going to be the new safe haven, then gold is going to go down, Bitcoin is going to go up. So it's purely a psychological matter as well. It's a matter of perception. It's a matter of beliefs as well. And I speak loads about beliefs in the past. And incidentally, my book about beliefs, personal beliefs, is coming out soon as well. I'll give you more details on that later. Nocoiners will regret for not buying Bitcoin when it hits 100k, crypto developer Jimmy Song says. So Jimmy Song, to Nocoiners, when Bitcoin hits 100k, you'll be kicking yourself for not buying. And what you won't remember is that you felt all the uncertainty and fear, and that's why you didn't buy when price actually dipped. Holders know, and that's why they deserve the gains, and you don't. So, trying to trip people into buying Bitcoin, basically, that's kind of what he's doing, is saying, if you don't have Bitcoin, then it's your own fault when it goes to 100k, and everybody who's bought it already is brilliant and fantastic, and they deserve the gains, and you don't. Totally understand two sides of this as well, why people don't buy Bitcoin and why people do buy Bitcoin. I myself have bought Bitcoin, obviously, but is that the fear factor? Of course there is, because of the regulations that the US are going to impose around the world as well. There's all that as well, but I'm hoping there's going to be enough time in between how kind of US kind of shoot down Bitcoin. Oh, there's going to be enough time in order to make a big gain before they do that. We'll see. We need to wait and see what happens. So I can see two sides of why people do it and why people don't do it. Federal Reserve injects $160 billion into the markets again, greater than the entire Bitcoin market cap. $168 billion. So after several days of plunging markets, the US Federal Reserve added $168 billion into the economy, a total higher than all money currently invested in Bitcoin. So separate auctions on Tuesday in the short-term lending market, or Repo, saw a 2-week offering massively oversubscribed, with $93 billion offered for a $45 billion operation, according to a March 10 CNBC news brief. An overnight offering saw the New York Fed's trading desk fill $123 billion in bids. Essentially, the US Federal Reserve have put more cash into play into the economy. Just now, that's what's kind of happened. So, for reference, the US government just dealt approximately $23 billion more cash than all the money held in Bitcoin. Taking its status as a global asset into account, one might argue that Bitcoin may still be a bit player in the finance game. So they've effectively, and this is because of Repo and everything else that they kind of do and hide it in bonds and stocks, just everything they do that the Feds do and kind of around the world do as well. It's not just America. But they've effectively just created another put another $168 billion in, which means the markets are going to go back up again. Everything looks okay and rosy, but the debt crisis is only going to get worse and worse and worse. And then eventually there's just going to be total economic chaos. But at the moment, probably the stock markets will go back up from here after this crash. Okay, that is it for the moment. If you like these videos, subscribe to this channel, hit that subscribe button, hit the notification bell as well so you get a notification of all the videos that I do, and hit that like button on the way out. Last one out, hit the likes, and leave a comment down below this video as well. If you want to join a free group, there's a link down below. If you want to join a premium group and check out all the hidden gems we've got and the calls that I make for Binance projects as well, usually make about 30 per month on average. Been slow this month because of the volatility, but made another couple this morning. If Bitcoin doesn't go down, they should play out well as well. But we've always got stop losses in place. So join the premium group. Love to see you in there as well. Until next time, Namaste. Take care. Bye now.